This long-term analysis places another trough of the 54-month cycle in October of 2011, as you can see. And again, I think there is a possibility, although I'm really sort of speaking ahead of myself here, but I do believe that there's a possibility that that might turn into yet another straddled trough, which would be very bearish for stock market prices. But it's just a possibility that I like to entertain and consider every now and then. Here is the previous straddled trough, of course, in August of 2007. One of the signs of a straddle trough is that you get a fairly symmetrical price action surrounding that trough. So that still works fairly well as a straddle trough in August of 2007. If we were to get a fairly symmetrical price action around the trough in October of 2011, then of course this peak that we've seen here is a little bit higher than that peak that was prior to that trough, but it's not impossible that we're going to see a fairly symmetrical price action still playing out, in which case this could turn out to be yet another straddled 54-month cycle trough. But that has very bearish implications, and those are very long-term implications, which in terms of today's discussion are really are purely of academic interest. So we might come back to them and discuss some of those things later. But having performed an analysis, of course, you take a look at the bigger picture so you understand what's actually happening. Okay, in this case, we can see that there was a 6-year cycle which is busy peaking at the moment. In fact, it probably peaked in October last year. As you can see from the semicircles I find very useful for visualizing these. You simply look at what the semicircle is doing today, if you like, and you can see the 6-year cycle has started turning down. Okay, it bounced up out of March 2009. It has been leveling out or topping. In other words, it's been forming a peak. The 6-year cycle has been forming a peak, and it's now turning down, probably. The 54-month cycle is still bouncing up. The 18-month cycle is still moving up, but probably about to form a peak and turn down. And the 40-week cycle, although on this detail it's a bit difficult to see, but it's heading down. So let's zoom in a little bit and have a look at the price action that has been playing out more recently. When I zoom in, I turn off my semicircles because I find them very messy, and I change the resolution of the data display to daily so that we can see a little bit more detail. So what has happened since that prominent trough in early October 2011? Well, you can see that according to this analysis, and this is not entirely a default analysis because I'm using a 6-year cycle, but otherwise I think that most instances of Sentient Trader will be performing exactly this analysis if you just run the default analysis on it. And you can see that the 20-week cycle, of course, bounced up from October last year, formed a trough in early March of this year, and now is bouncing up again and is coming down to form another trough, which will be synchronous with the 40-week cycle. The 40-week cycle, of course, bounced up in October last year, is now forming a peak and is heading down. Okay, so that's what's happening to those two cycles. The 40-week cycle, you can see, is expected, these are what we call the circle and whiskers. So the 40-week cycle is expected to fall round about there where that circle is, which is towards the end of May, or in fact the range of time it is expected to form is any time up until the end of June. So end of May, any time towards the end of June, the 40-week cycle is expected. The 20-week cycle, because it ran fairly long in the previous cycle, is expected slightly later, and we can measure that. You use the control button on your keyboard and click with your mouse, and you can measure that cycle. You can see that that cycle was 22 weeks, which is a fairly long 20-week cycle. As you will know, 20-week cycles are usually actually shorter than 20 weeks. I think their average length is about 19 weeks. So that was a slightly long cycle. So the next 20-week cycle trough is expected slightly later, as you can see from the circle and whiskers of the 20-week cycle. That's projecting a trough sometime early in July, or in fact any time in July. Okay, so what's happening in terms of the bigger picture? Well, in terms of the bigger picture for what's happening, the market bounced up out of the October trough, as you can see, and is now heading down towards a trough which is going to be a 40-week magnitude. 40 weeks is about 9 months. Okay, so we're approaching a trough of about 9-month strength or magnitude. Okay, that's what's happening right now. So now, when you're going to make trading decisions, of course, the first thing you do is you choose a trading cycle, and I could spend a long time speaking about that. But as you might know from our previous trader chat, we are looking at the 40-day cycle. Because that's quite a useful cycle to trade. I quite enjoy trading it myself personally, so that's the one I'm looking at. If you want to know more detail about that, then ask questions about it. But I'm just going to sort of move along for now and say we're trading the 40-day cycle. So now let's take a look at the 40-day cycle and start making some decisions. One of the things you'll know about Hurst's cyclic principles is that there are two very important tools. There is the FLD, the future line of demarcation, and you can plot on your chart an FLD for every single cycle that's been found in the market. Okay, your charts very quickly begin to look like what one of our early beta testers described as a kitchen sink. So we avoid doing that, and we only display the FLDs that might be pertinent to the cycle that we're particularly interested in at the moment. The other cyclic tool is, of course, the VTL, the valid trend line. And again, we will only display valid trend lines for cycles that we're particularly interested in. Now, one of the emails we received this week had to do with the projection boxes that Sentient Trader plots for you. And so let's talk about those, because the cyclic tools are all very well, but when you're trying to get your head around all these FLDs and all these VTLs and what's happening with the cycles and underlying trend and where is this going and where is that going, Hurst cyclic principles can appear to be fairly complicated. In fact, they are magnificently simple. And once you've really understood them, they're really easy to work with. But on a first look, they can seem terribly complicated. There are all these lines and all these projections, and what do they all mean? Okay, well, let's sort of break that down a little bit. First of all, we can turn off those lines if they bother you. They're very useful when you're going to perform trading decisions. But one of the things that you must know about Hurst cyclic principles, of course, is that on the basis of the fact that cycles are cyclical, and the cyclic tools are future lines of demarcation, FLD and the VTL, the FLDs project targets for where price is expected to move. So let me just show an FLD. The way an FLD works is that when price crosses an FLD, okay, a projection is created, a target is generated, and I can show you if we look back in past time, I can show you where that happened. When price over here in early April crossed down below the 40-day FLD, a projection was created which traveled from the previous peak, which was towards the end of March, and through that projection and equidistant on the other side. So that projection would have been to about over here. Now, as you can see, that projection was achieved and in fact exceeded. Price went even further down below there. Now, the very simple way of looking at projections is to simply take the price across the FLD and project it. But you can get a little bit more complicated, and projections can be expected to either exceed or to underfulfill their projections according to underlying trend. But let's not get too complicated about that. Fortunately, in Sentient Trader, because looking at all these separate projections can be a little bit mind-boggling, one of the first things that I did when I built Sentient Trader was I created what's called an FLD pattern projection. Okay, and so the easiest way to work with that is to pop up the FLD pattern projection boxes for the cycle that you are trading. Okay, there are always two of them. There's a red one and there's a blue one, and a green one. Okay, under unusual market circumstances, both boxes might be the same color. The basic principle is that a green box is where you should consider buying, and a red box is where you should consider selling. Okay, there are always two of them. Those two show you the current move that is underway, and if you move your mouse over there, you can see it pops up a thing that tells you about the FLD pattern projection box. It gives you a range of data and a range of price. And then the second box is the next move, the next expected move. So let's just have a look at what these pattern projection boxes are telling us at the moment. And then I'm going to come back and say a few more things about these projection boxes. We had an email asking a specific question, which I'm going to answer in a moment about that. Let's first of all look at these pattern projection boxes. Okay, the first thing is that this projection box over here, the green one, as you'll notice, the color which fills the green box is spilling out below the box. Okay, that's not a mistake. That doesn't mean that the software code that fills the box has made a mistake. What it actually means is that that projection is expected to be overshot to the downside. In other words, we expect price to come into the middle of this box and possibly even a bit further, because that color is expanding below there. Let's have a look and see what these pattern projection boxes are telling us at the moment. Let me just adjust the scaling, and let me draw on here. Okay, it's very simple. The 40-day cycle last experienced a trough over here on is that the 9th or 10th of April. Okay. So the 40-day cycle is then, of course, expected to bounce out. Price is expected to bounce out of that cycle. Okay, where is it going to bounce to? Well, it's going to bounce to the first FLD pattern projection box, this red box over here. All right. Now, the two things the box tell you. The first thing is, of course, price level. Okay. Now, the hot spot of the color, in other words, where the red is the brightest, is the price level that projection was expected to achieve. And I think you can see there that red hot spot is about 1390. And in fact, that projection was achieved, has already been achieved, I should say, but it has been achieved